Hello everyone and welcome to Day Trader S&P 500. Today is Friday, July 14th, 2023. This is Dale Woodson, editor of Woodson Wave Report. Been out a couple weeks, had surgery and had intermittent internet at best, so we were able to get a couple handful of reports out during that 2-week period. I wanted to get to our YouTube subscribers and get you guys caught up also. Okay, I want to start with the US 10-year because there's some interesting things going on. We're looking at a daily chart. This is 5 waves up from the March 2020 low. It was under 1%. It went to 4.335. That was one up. We had an A down here, a B up here, and a C down here. You can see that was 3.253%. C equaled A lower at 3.075, and the 0.382 is even lower than that at 2.810. But what is interesting is what happened from this low here, okay, of 3.253 right there. We had a 1 up and a 2 down, and a 1 up, a 2 down, a 3 up, and a 4 down, and that 4 hasn't been adjusted. Anyway, well, we could count it a couple different ways, but we need to see a move. The trigger here is the B wave high of 4.089%. A move above that trigger gives us this target for a minimum of wave 3. Keep in mind, wave 1 took, a couple of years, okay, a year and a half at least. So that was key. And the other key is the trigger down here, moved below this 3.253, brought these red targets into play. Okay, so I'm going to move this off the daily and into the hourly. See if I can extrapolate that out. There we go. Okay, so we had a 1 up here and a 2 down here. This might be a little bit off. There we go, because we changed from daily to hourly. There's that 4 in there. Okay, so from the, let me fix these. There we go. There we go. Okay, we had a 1 up, parentheses, a 2 down, and then within the larger wave 3, we had a 1 up, 2 down, 3 up, 4 down, and we're looking for a move above this high here, okay, the 1.414 multiple for wave 3. We got it, and we got a higher high, which is most likely 5. Here's our targets here for 5. You can see them in the black, but I've written them out, okay. We had a 4.057 down to a 3.913, and I believe this high was right above that 4.090. Okay, it went above the 4.089 by a point. There you go, that B wave high, that trigger. So it hit that trigger. Not coincidentally, that was wave 5. Let me just put a 5 in there because I don't want to get that other 5 in the way of everything. Okay, there we go. And that's a 5. Okay, so we've got a 1 up, 2 down, 3 up, 4 down, and a 5. Okay, so we actually need to see a correction of that 5 wave rise, and that's in the red here. Okay, you can see the 382 is at 3.790, and it went down and touched just below that. The 50% is at 3.695. The 618 is at 3.601. The main thing to take away from here is we've had a 1 up and a 2 down, and this makes a 3, so we'll get a 4, and then we'll get a 4 in here, and then we'll get a 5 up, and that'll be one of the larger degree wave 3. So these things are going to start taking off after this 4th wave. We'll get a 5 higher, then a correction, and then an unbelievable move up in the larger degree of trend. Okay, so this was huge. A little sell-off here, but that's to be expected. And you can see this 50% retracement at 3.695 is right near that previous 4th wave where all that accumulation is. And we kind of touched in there already. We'll see if that does it, if it, the correction goes just between the 382 and the 500, or if it hits the 50% or 500 right there, the previous 4th wave low. That would be a great place for that correction to end before it takes off higher. Okay, so the big takeaway was this trigger was activated here by 1/100 of a point. Okay, but a higher high was all that was needed, and this 5 had to be above this 3, which it did easily. So in the very short term, expect a correction unless it's over here at 382. In a little bit longer term, this thing is going up. Like I said, it went down for, what was it, 39, 49 years. So I think it's going to go, we're 2 or 3 years into a 40-year bull market in interest rates. So this is just the beginning, but it's taken off. Everything is to form. Okay, that's it on the US 10-year. Let's go to the S&P. We've got a weekly chart here. There's the all-time high, January of 2022. A 1 down, a 2 up, 3 down, a 4 up for a leading diagonal overlap. Wave 5 down, larger degree wave A in October. We got an A up, a B down, and a C up. The 786 Fibonacci retracement for this move is 45.27, and the 786 is 44.97. You can see this thing is right in there. That's a great combination of retracements, both a retracement and a multiple, C wave multiple, and a 786 retracement. And that high is 45, let me get it in there, 45.27. Yeah, I got it right there, actual, okay. I'm sorry, it was 45.17 and 44.97, and it hit 45.27, which is 10 points above that C wave multiple there. So that's the bigger picture. You could label this WXY a couple different ways, but I like to keep it simple here, ABC, the larger wave B. Once wave B up is done, wave C below the wave A low will happen. Okay, let's get a little closer here. Here we can look from that A wave low. We've got an A up, a B down, and an A, B, C. I wanted to show here a few different things. One is the C wave should be 5 waves, so we're correcting 4 degrees of trend. It's at wave 5. It's this C from an A up, B down, C up. It's this C from the A in parentheses up, B in parentheses down, C in parentheses up. And it's this B from this A down from the all-time high, A with a capital in parentheses, and B up. So it's 4 degrees of trend, right? Wave 5 of C of B. Okay. That trigger activated above that 43.25 high last August. That activated the higher targets, and there's an open gap down here at 42.21, and now the lower side target is the previous A in parentheses high of 4100. Okay, so this could go a little higher. We have some multiples up here. The 1-to-1 for that 5th wave is 45.59. We hit 45.27, and you can see the 786 is at 45.34, and the 1.68 multiple for wave C is 47.50. So we have a couple higher upside targets. However, this move is complete, or at least nearly so. Okay, that's the daily. Let's look at the hourly. Here we go. Here's that 5-wave advance. I want to point out, it was well over 2 months ago in early May that we saw 3 waves down and then a move up. And right away, we told all our subscribers, we got 3 waves down, we're going to get 5 waves up. And that's just basic Elliott waves. And sure enough, we got a 1 up, a 2 down, 3 up, a 4 down, and 5. Here's our wave 5 targets here in the S&P. You can see those 45.92 down to 44.91, and in between. And the high so far is that 45.27, which happened today on the 14th. There's room to go a little bit higher, but not much. This market is bumping its head up against the ceiling, and there's some gaps below to be filled. Came down and closed this gap for the 4th wave. There's some remaining gaps there you can see. Okay, that's the hourly. Do we want to even get any closer? Well, that's the 1 minute. I was looking at that today to see if we can get 5 waves down and 3 waves up. Still way too early in that pattern to call for a trend reversal just yet. This is the daily of the ES E-mini futures. Basically the same chart as the S&P cash, different numbers, but same structure. And you can see the high so far is 45.60.50 attained today on the, why does that say Thursday? That's Friday today, okay. And again, I didn't put the 1, 2, 3, 4, 5 in there, but that's 4 degrees of trend. We have C of an A up, B down, C up, C of C in parentheses of an A up, B down, C up, and then B capital in parentheses of an A down from the all-time high and a B up. Excuse me. Of course, when wave B is complete and it's right on the 786, there's a few multiples there to hit, then it'll give way to wave C in capital parentheses below the wave A low. That was again our 43.2750 trigger in the E-minis. That was at August high. That told us we were going to get higher highs. There's a gap down here at 42.98 and our trigger, downside trigger again, is the previous A in parentheses high. In this case, in futures, is 41.80. That is the daily. Excuse me. Let's look at the hourly. Again, I want to point out, over 2 months ago, we saw this three-wave decline, A, B, C. That was 3 waves down, direct hit right there. We got a 1 up, a 2 down, a 3 up, a classic 4th wave triangle. Elliott says after triangles, you get a thrust in the direction that it was going before the triangle. Obviously, for the 3rd wave, it was up. We got the thrust for wave 5. So that trigger told us it would go higher. It did. Then we got another trigger here. It goes higher. And here we go. So we got a 1 up in parentheses, a 2 down in parentheses, a 3 up in parentheses, a 4 down in parentheses. And there's our wave 5 targets. I think I got those on the report I got out late yesterday or early yesterday morning after we got in back into the office. But there's our high so far in the ES. Let me get that report out we put out yesterday. And this chart's a little bit off center, but here we go. We got in late the night before. There's that chart. Like I said, it's a little off center, but you can see our targets there. There are some higher 5th wave targets. And this was before today's action, which went above that 1.00 right there. You can see all that's the 3 waves down. The trigger, downside trigger now is 41.14. But I wanted to show you guys, here's what we said Thursday. Look for the market to achieve at least a 1-to-1 relationship of 5-to-1 at 45.33.50. And at that point, it hadn't yet, but as we all know, it did. Okay, and there it is there, the 45.60.50. So that's the hourly. I don't know if we have anything on the 10-minute. Yeah, you can see there's those same targets there. There's a 4th wave high. I've got it zoomed in a little bit. This is the same chart as you can see right there. So that's what we're looking at. A little bit higher, but this move, like I said before, looks complete or nearly so. Maybe we'll get to the 1.618 up here at 46.35.50. We're already at 45.60, so not much room to go the upside. This 5th wave of C, of the larger C of the larger B, appears complete or nearly so. We will leave you guys with this chart here. Hope you guys have a good weekend, and until next time, take care, everyone.